Good morning, folks. Today is Wednesday, March 6th, and what we're doing, looking at our price line trade. So yesterday we did a good Google trade. We closed it out, and what we want to do is maximize our price line bull call as well. So if you see, the bull call right now is right here. It's at 723. So we have a profit of 1350. So you can see that we have a profit of 1350 on this trade. And this trade is in the May series. So here we have the May series. We've got a bull call on 710, 720. So it's moved nicely upwards. Price line is at around 722. We put the trade on when price line was about 685 or 690. So we've got this profit. Now what I want to do is to protect this profit. And so what we want to do is come to our April series and look at 770, 780. So this will be a bear call at that level. We are going to get a credit of 1.65. So now this is not going to increase your margin significantly because we already have this bull call here. So, by picking up 1,650, if price line turns back, then this bear call will make money. And we can still keep our bull call, which is anyway in the May series. I want to sort of capitalize on any up moves because markets look very positive. So even if price line goes up, our short call is at 770. Yesterday I thought we would put it on the 760, but price line went up some more. So now we have a little bit more room. We're going to put it at 770. So if we put this trade on now, obviously and I'm going to check this. And this graph is going to look a little confusing because now we have different expiry series, but you can see we are fairly delta neutral, just a slight delta negative. We are going to become theta positive because we are now opening a bear call in the April series, so that's going to decay faster. So we're going to become theta positive. And you'll see that we are still sort of delta neutral, and it still gives us a room to the upside. Now the right way of looking at this chart is not by looking at +1 expiration. You have to go to +2 expirations because we have 2 expiration series in this in this trade now. So the way to look at it, the white line obviously is your current today's line. Then you have a red line which is for the April series, and if in April if this goes, even if price line continues to go up, as long as it's below 770, we'll make a profit. But you can also see as it goes up, our May series is also going to make money. So this will optimize an upward move. And at the same time, if price line turns back, then the April series will make money. So that's how we have to look at it. So whenever you have different expiration series, if you have 2 expiration, you've got to go to +2 expiration. If you have 3 expirations, then you have to go to +3. And you have to interpret each one of these graphs by itself and then collectively. So collectively, if you look at it collectively, then you just, maybe change it to 1 expiration. No, that's not right, because that will only show you the it'll show you the April and May together, but it will only show you a partial picture because it's not showing May at all now. So that's not the right way to do it. The right way to do it is this. And although it looks complicated, if you look at it a few times, this will become more clearer. Basically, the white line is today, the red line is April, and the orangish line is May. So I think we can still optimize a move to the upside. And at the same time, we can get some time decay off of the 770. 770 seems to be a fairly reasonable out of the money spread at this point. And we could perhaps go to 780 and to make it a little bit more safe. Let's see what happens if we do it to 780. 780, then I'll have to turn this to 790. And we get a 1.2. So we'll get a $1,200 credit. So, it's up to you. I think 770 is safe, so I'm going to keep it at 770 and change this to 780. Let's pick up $1,650 in credit. So then, I think that's a safe enough short strike. So this is the trade I'm going to put on today. If you get a chance, I'll also write it up on the email, but if you get a chance to watch the video, then this is what it is. Thanks.